You know that feeling when you go to the store and realize the price of your favorite snacks or goodies has gone up? That's inflation at work. It's like a sneaky little critter that slowly gnaws away at the purchasing power of your money over time. But guess what? It doesn't stop there. Inflation's effects are way more widespread than just those groceries in your cart or the cash in your wallet. And today, we will tell you how inflation affects your investments. Picture this. Inflation is like a silent wave that lifts the cost of goods and services, affecting everything from the price of gas to your snazzy new wardrobe or even that shiny new car you've been eyeing. And here's the kicker. It can also have an impact on your investments. Now, you might be wondering, how does inflation have anything to do with my investments? Great question. Just imagine if the prices of everything are going up, that means your money's buying power is shrinking too. And that could potentially eat into the returns on your investments. Navigating inflation's impact on your investments. Inflation has a curious way of affecting our investments, and the impact varies depending on the type of investment you have. Let's take a closer look at how it affects different investment avenues. Number 1. The intricacies of fixed income investments. When seeking a stable income stream from our investments, fixed income securities like corporate or municipal bonds, treasuries, and CDS often come to the rescue. These instruments provide us with regular interest payments that we can count on. However, there's a little twist to this tale when inflation enters the scene. Picture this. As inflation climbs higher, the purchasing power of those interest payments starts to dwindle. Why is that? Well, it's because most fixed income securities stick to a fixed interest rate until they reach maturity. So when inflation goes up, the future value of those fixed interest payments declines, making them less appealing. The result? Bond prices can take a hit as inflation rises. This phenomenon occurs because the present value of future fixed cash flows decreases, all thanks to inflation nibbling away at their purchasing power. It's especially true for longer-term bonds, as the cumulative impact of reduced purchasing power becomes more pronounced for cash flows received far down the road. In other words, rising inflation can be like a pesky bug biting into the returns on your fixed income investments. Number 2. Effect of inflation on stocks. Starting with stocks, they have a remarkable track record of outperforming bonds during periods of rising inflation. However, inflation's influence on stocks is a tale of two forces that tend to balance each other out. On one hand, inflation can knock down stock prices by altering how we value a company's future income. When you invest in stocks, you essentially buy a piece of the company's future cash flows based on its profits. The value of the company, and hence its stock price, is determined by calculating the present value of those cash flows, factoring in inflation through a discount rate. As inflation rises, this discount rate also increases, resulting in a lower present value and possibly a decline in the stock's price. On the flip side, inflation can actually cause stocks to rise in value. As businesses face higher operating costs, they can often pass on these expenses to their customers, leading to increased profits and cash flows. This growth in financial strength can elevate the present value of the company and potentially boost its stock price over time. Number 3. Effect of inflation on real assets. When it comes to investing, inflation can be a game changer, but fear not. Real assets are here to save the day. According to the U.S. Bank Asset Management Group, real assets like commodities and real estate actually thrive in the face of rising inflation. Let's talk commodities first. These gems have a long history of standing tall against inflation. Why? Because as inflation drives up the prices of goods and services, commodities directly linked to them get a boost too. Take energy-related commodities like oil, for instance. They practically dance with inflation. Even industrial and precious metals join the party, rising in value as inflation accelerates. Now let's venture into the world of real estate. Property owners, rejoice. When inflation kicks in, you can amp up those rent payments and reap the rewards. As prices for goods and services climb, so does the income flowing into your pockets. It's a win-win situation for investors, with profits and distributions on the rise. Number 4. Effect on bonds. Bonds are like trusty guardrails that steady your portfolio during turbulent times in the stock market. They offer a sense of security, but don't be fooled. Inflation can still cast its shadow on them. Here's the deal. As inflation rises, the purchasing power of the cash you receive from fixed coupon payments goes down, unless you cleverly reinvest these payments at increasingly higher interest rates or into a diverse array of stocks. When inflation is on the rise, bonds with relatively low yields may face challenges competing with the soaring costs of goods and services. It's like a race where the pace of inflation can outstrip the bond's earnings. Additionally, the term length of bonds comes into play. Longer-term bonds, while potentially attractive for other reasons, can increase the risk that higher inflation might erode the value of your payments over the bond's lifetime. But don't fret, for there are bonds that act as guardians against inflation's sneaky ways. Enter Treasury Inflation-Protected Securities, or TIPS, the heroes designed to shield your investments. Backed by the U.S. government, these bonds are like chameleons, adjusting their par value with the inflation rate while ensuring you receive a fixed interest rate. So, whether you're close to retirement or just beginning your investment journey, understanding how inflation affects bonds empowers you to make wise financial choices. Embrace the potential that lies within the world of investments, and with knowledge on your side, you'll navigate the ever-changing landscape of finance with confidence and finesse. Defend your investments like a pro, beat the inflation game. Inflation can be a sneaky little foe, slowly chipping away at the value of your investments over time. But fear not. We've got your back with some savvy strategies to protect your hard-earned money and keep those worries at bay. Embrace the power of diversification. It's like building a fortress for your wealth. By diversifying your portfolio with a mix of U.S. stocks and real assets, you create a sturdy defense against the ravages of inflation. Think of it as having a well-balanced team that can tackle any economic challenge that comes your way. But hey, just a heads up. While diversification is essential, it's not a magic shield against losses or a guaranteed ticket to sky-high returns. Stay smart and vigilant. Meet your new ally, Treasury Inflation-Protected Securities, TIPS. Introducing your secret weapon, TIPS. These little wonders, issued by the U.S. government, are specially designed to keep inflation in check. Their returns are adjusted according to the Consumer Price Index, CPI, making them a reliable performer when inflation tries to throw a curveball. Now, we won't sugarcoat it. TIPS might not offer jaw-dropping returns or impressive income, but they are your trusty sidekick when it comes to safeguarding against inflation's nasty effects. Remember, we can't control inflation's mischievous ways, but we can be proactive in safeguarding our investments and savings. So take charge, be smart with your choices, and let's show inflation who's boss. Disclaimer: these strategies are designed to be helpful, but not foolproof. It's always a good idea to work with a financial professional for personalized guidance on your unique financial journey. Together, we'll weather the storm and come out stronger. If you enjoyed this video and want more insightful content to fuel your financial journey, don't forget to hit that subscribe button and ring the notification bell. We're here to guide you through the maze of investments, economics, and everything in between.